If you think you already missed the AI boom, I have some bad news for you, and some very good news. The bad news is this. The easy money from 2023 and 2024 is mostly gone. Many people chased hype, and a lot of them ended up losing money. But here's the good news. In 2026, AI is entering its real phase, what experts call the AI infrastructure phase. And this phase is not about hype. It's about real companies, real demand, and real long-term opportunities. In this video, I'm not going to sell you any get-rich-quick ideas. Instead, we'll build a simple 5-step roadmap that shows you how to start investing in AI today, whether you have $50 or $5,000. Hello, this is Future Finance Lab, where we simplify the future of investing. The biggest mistake beginners make is saying, I just want to buy an AI company. But the truth is, AI is not one company. AI is an entire ecosystem. The easiest way to understand AI is to divide it into 3 buckets. Bucket number 1, the creators. These are the companies building AI models, software, and intelligence. This is where innovation happens, but competition and risk are also high. Bucket number 2, the enablers, infrastructure. This is the most important bucket for 2026. AI doesn't run on air. It needs powerful chips, massive data centers, and enormous amounts of electricity. The companies that provide hardware, data centers, and energy are quietly powering the entire AI revolution. Many of the biggest winners of this decade will come from this category. Bucket number 3, the users. These are companies that use AI to increase profits and efficiency. Banks, hospitals, and large businesses. This bucket may look boring, but it often provides stable, long-term returns. Remember, AI isn't just about creating intelligence, it's also about running it and using it at scale. Now the question is, how should beginners invest? Option 1, ETFs. An ETF is like a basket that holds many companies at once. If one company struggles, others can balance it out. That means lower risk and less stress. For beginners, ETFs are usually the safest starting point. Option 2, individual stocks. Here you choose single companies yourself. The upside can be higher, but the risk is also higher. That's why most beginners should use a core and explore strategy. Put about 80% of your money into safer ETFs, your core, and use the remaining 20% to explore individual stocks. This way, you learn without taking unnecessary risk. Let's look at a simple example. Imagine you have $1,000 to invest. A smart 2026 AI-focused allocation could look like this. 60% in a broad AI or technology ETF. This is your foundation. 30% in AI infrastructure companies, chips, data centers, and energy providers. This is the engine of growth. And 10% in high-risk, high-reward ideas, your moonshots. This kind of portfolio balances growth and protection. And just to be clear, this is not financial advice. It's for educational purposes only. Now let's talk about the practical side. Buying a stock is much simpler than most people think. First, you search for the ticker symbol. Next, you choose an order type. A market order means buying immediately. A limit order means waiting for a specific price. For beginners, market orders are usually the easiest option. And here's a critical rule. Never invest all your money at once. Instead, invest small amounts regularly. This is called dollar cost averaging. Markets go up and down, but this strategy helps smooth out risk over time. Now let's be honest. Is AI a bubble? Some companies will fail. Absolutely. Just like during the dot-com era. That's why diversification matters. And here's the golden rule. Only invest money you won't need for the next 3 to 5 years. AI is not a sprint. It's a marathon. So today you learned how the AI ecosystem works, how to choose your investing style, how to build a balanced portfolio, how to buy step by step, and how to manage risk. Now it's your turn. Comment below and tell me, what will be your first AI investment? And if you want to learn where to invest with just $50, make sure you watch the next video. This is Future Finance Lab. Invest in the future, the smart way.